and afternoon wherever you are. I am jumping on today fresh back from holiday and keen to really dig into what's going on in the world, especially for startups, and to share some insights on that, some insights from the clients I'm working with, from the companies that I'm investing in, to help you guys as startups to navigate what is undoubtedly some of the choppiest waters we've seen really since the pandemic, but even before that, because the pandemic, whilst a pretty terrifying situation at the time, I think was a relatively known kind of economic consequence insofar as governments just went hell for leather on stimulus, propping up the economies, keeping people in work, etc. So we knew what we were dealing with to some extent, even if from a kind of public health point of view, that was really challenging. Whereas today, what we're seeing is central bankers around the world raise rates to tackle inflation, which has not only been driven by the huge amount of economic stimulus that came out of the pandemic, but also that's been driven by some of the COVID unwinding, so to speak. So some of the challenges with supply chains that we've seen over the last 12 months, including more acutely slowdowns and lockdowns in China and Shanghai, which has had a big impact there on supply chains. But then also we've got some of the geopolitical tensions coming out of the Russia-Ukraine war. So we think about that, really what we've got is we've got these huge supply chain challenges, which have been coupled with these huge demand boosts from the pandemic against a backdrop of pretty light touch and loose monetary policy conditions. And so really what that means is we're facing this huge mismatch. And as all those mismatches come together, tightening of monetary policy, a dampening of demand, and a kind of reconsolidation of supply chains, we're not quite sure where this is going to go, how this is going to impact earnings, business investment, individual consumption, government finances. Will we see a return of some of the Eurozone debt crises that we saw after the great financial crash? And obviously, we don't know what's going to happen with the Russia-Ukraine war and the impact that is going to have in terms of sanctions, energy supplies, food supplies, etc. So it's safe to say we're in a pretty uncertain time. But what we're seeing specifically this week, as the Fed raised interest rates by 75 basis points, the Bank of England raised by 25 basis points, the ECB called an emergency session, is, in short, we're seeing a tightening of monetary policy conditions in the monetary environment. And what that means is that capital is going to become more expensive. But it also means that as central banks seek to temper down inflation, recessions are likely to become a fixture of the future. Whereas before, a lot of this focus, both from central banks and from governments, certainly in the pandemic, was about maintaining incomes, livelihoods, employment. Now we're seeing inflation as the real target that's in everyone's crosshairs. So recessionary environment, tighter monetary policy conditions, all means that growth is likely to be slower. Not only does that mean consumer growth, but also obviously business investment. And so whichever way we think about it, for startups, growth is going to be slower. Customers are going to be more wary. They're going to be more price sensitive, and that is going to have an impact on growth. But it also means, because of those growth challenges, and because capital is more expensive, investors are going to be much more cautious in making decisions and making investments. Valuations are, and already have been, pared back. Investment decisions are going to be slower because they're going to be made slower. There are going to be fewer deals. There's going to be more competition. As we mentioned, that's going to have an impact on valuation. So in short, capital from investors is going to be harder to come by. Growth is going to be harder to deliver. Now, that sounds pretty pessimistic from a startup point of view, and that's not what I'm here to do today. I think you can come to your own conclusions about the environment that we're in. But what it means is that the capital, investor capital, is going to go to the companies that can really demonstrate and credentialize success. And that sounds pretty freaking obvious, to be honest. But I think what has changed is that pathway to success has changed. If we think about during the pandemic, super loose monetary policy conditions, huge amounts of government stimulus, huge kind of government support programs, whether it was to do with labor, income, corporate, etc. What that meant was that with all that cheap capital, some of the most successful companies were the ones that could consume it as quickly and as effectively as possible. Whereas now what's changed is, because capital is much more scarce, we're going to see that the successful companies are those which can conserve and be really efficient with their capital. Now, this is often a metric that's used when we look at SaaS companies, SaaS software companies. And I appreciate in the sustainability and climate tech space, there are a lot of businesses that are much more hard tech or deep tech. And obviously, they have many more constraints around some of their capital requirements, bigger ticket investment items, longer lead cycles, and some of that stuff. So there isn't a one size fits all approach here. But what it means is that we need to use capital more effectively. We need to be much more targeted. We need to be much neater and smarter with our working capital. And I'll come on to talk about those in just a second. But I think one of the other things we really need to be able to demonstrate during this current environment is that we have a clear pathway to profitability. Now, sure, that may still be in years to come. We're not saying that now we're going into a potential recessionary environment or interest rates have risen, we need to be profitable in the next month. Well, what it does mean is that because capital is going to be expensive, because the IPO and the exit environment, whether it's IPO or whether it's to incoming investors or potential M&A, because that environment is much less certain, we need to demonstrate how we can get to break even. And that's going to be really important. So what this really means then is that a lot of this comes down as a leadership moment. This is a moment where quick thinking, quick action, quick communication is really going to come in handy. And the reason for that is because in any of these types of environments, to evoke Darwin, it is not the strongest to survive, but it's those who can adapt. And specifically in this environment, it's going to be those who can adapt the quickest. So as you move, or as we move from this environment, which is really capital consumptive, into one that's got to be much more efficient as a startup, we need to make those decisions as to how we move much more quickly. So if you haven't already, I would really implore you to start making those decisions. What does that look like? That looks like having an honest assessment with your team, with your shareholders about the environment that we're in. As I mentioned, we're likely to see capital raising become much more difficult. Valuations will be lower. What does that mean for your valuation expectations? Decisions are going to be slower. So give yourself more time to raise capital. Deals are going to be much more competitive. So make sure that whether it's through your product roadmap, through your service offering, etc., or even just through your culture, and obviously the impact that you're making, make sure that you're differentiated. Make sure you're demonstrating that, and make sure you're delivering meaningful, and additive traction. This is not the time to take some big moonshots. This is the time to deliver meaningful and steady growth. So have some of those discussions. Crucially, have those discussions as well with your suppliers, with your team, with your investors, and just let them know that this is going to be a moment, not for panic, but this is going to be a moment here for composure, for taking aligned action and being really decisive. And those companies that can be decisive earlier are not only going to survive through this environment, but as they reorientate, they can potentially take advantage of this opportunity in the same way that many companies did through the pandemic. Then those will be the companies that thrive. Trying to just rededicate ourselves to the same old strategy in a hugely different environment is not going to work. We need to appreciate the moment that we're in, see it not only as a challenge, but also as an opportunity to innovate, to reorganize. This is cover to make some of those tough decisions that maybe we haven't been making today. And so now is the moment to make those decisions, get everyone on board, and use it as an opportunity to come out of this much stronger as a team. So what are some other tips when it comes to that? Well, I highly recommend you reassess your go-to-market strategy. Not necessarily because I'm assuming everyone's is off kilter here, but now is the moment to do that. Look at those verticals, look at those industries, look at those customer subsets, which are most likely to deliver meaningful, steady growth. As I said, move away from moonshots, move away from those huge enterprise deals that might pay off in years to come, and try and focus on what are the shorter term paybacks. Same comes with any investment decisions you're making. Unless it is delivering growth, or unless it is saving capital in the longer term, or unless it is delivering meaningful product features which are going to enable you to acquire more customers, then try and stay away from any of those investments. Now is the time to be really smart with where you're making those investments. But also think about how we can potentially restructure pricing. How can we make sure that actually we're holding on to customers? How can we prioritize or incentivize customers to change some of those pricing terms to improve our working capital? And how can we change some of those pricing structures so we can lock those customers in for the long term? And then finally, use this economic environment not as a backdrop or not as an excuse here, but use this as a test, as a challenge in the best possible way. A number of people have spoken about how this is a crucible moment for leaders. And I would strongly urge you, I would plea for you to step up to that moment. What does that mean? It means having those tough discussions, as we mentioned earlier. And what that also means is coming out of this, we're likely to be seen in the eyes of our customers as trusted partners. We're going to be seen in the eyes of our employees as leaders that they can trust. And we're going to be seen in the eyes of our suppliers as partners that they can continue to do business with. And potentially most importantly, in this current environment when capital is so scarce, what we're going to be demonstrating to our investors is that we are entrepreneurs that are worth backing. So this is not all about doom and gloom. This is an economic environment that is simply changing. And the one thing that is constant in anything is change. So now is the time to make quick decisions, make those tough decisions, but most importantly, communicate it. Communicate it assertively, but humbly to those that you're working with most closely and those who are critical to your success so that we can come out of this not only surviving, but also thriving. And I would love to support any of you that need some help on that. So if you've got any questions, please don't hesitate to get in touch. Or if you want to hear more about some of the strategies and techniques to manage and navigate this environment, please just click on the link below for my upcoming webinar. And we will talk a lot more about how, as VC investors, we're advising some of our startups to navigate this environment, some of the calls they need to make, and some of the strategies that they can deploy to help manage it. So I hope to see you there. Thank you very much for listening, and we'll speak to you soon.